Hello and welcome to BloxLive. Today is Wednesday, March the 27th. We're now live with the latest in the crypto world. It's 10:30 a.m. in New York City and 2:30 p.m. in London, 11:30 p.m. in Tokyo and 3:30 p.m. here in Malta. Well, a bullish momentum has hit the crypto market once again after 2 days of sell-offs that drove the total market capitalization down by almost $5 billion. But the market has recovered from that bear and the total market cap stands at around $141 billion US. The 24-hour traded volume also saw an increase of over $2 billion. Let's take a closer look at the trends. Now, the cryptocurrency index CCI 30 is bullish as well. The 15-minute chart stands at just over 2,517 points. The year-to-date change is up by 15.3%, and the month-to-date is 11.5%. The 30-day Bitcoin volatility index has been on a decline over the past week now, and now stands at 1.3%. The 24-hour traded volume indicator grew by over $4 billion since yesterday and now stands at $37.5 billion. The Bitcoin dominance indicator continues to drop. It now stands at 50.5%. The top 5 digital assets are all in the green, and the price of Bitcoin is again beyond the $4,000 US level after a 24-hour increase of 2.3%. Now, Ethereum is also riding the bullish wave move north of about 3%, and its price is just under $139 US. Now, we're also seeing that XRP has moved upwards by 2.3%, and it's flirting with the 31 cent level. Now, the price of Litecoin saw an increase of just about 3.4%, and its price is over $61 US. EOS is the top gainer in this category with a move north in the double digits. After an increase of over 11.4%, its price has surpassed the $4 mark. The Coin 360 heat map shows a field of green with very few scatters of red across the chart. According to the token spread website, the CEX exchange shows the top spread for Bitcoin dollar of 0.2%. The Bitstamp and CEX exchange show the biggest intermarket spread of nearly 2%. We'll now take a look at some of the characteristics of the SIA project and SIA Coin. SIA is a decentralized cloud storage platform. This data storage marketplace uses blockchain technology to make cloud storage more affordable and more robust. Now, when we look at user files, they are encrypted and distributed across a decentralized network. The company claims that storing 1 terabyte of files on SIA Coin costs just about $2 US. Renters pay for services using the SIA Coin cryptocurrency, which can be both mined and traded. The price of this asset jumped to nearly 10 cents in early 2018, and it currently trades at just less than 0.3 cents. We'll now review the performance of the cryptocurrency asset classes. We use data from the Messari website, which groups cryptocurrencies into 5 major categories. The infrastructure group is in the green with an increase of about 5.4%. Now, some of the top performers here are Cardano and also EOS, with moves north in the double digits. ADA is up just over 10% and EOS by 11.5%. The media and entertainment category is also bullish, with gains averaging at 8.4%. Top performers in this group are Poet with a move north of 6.5% and Decentraland's Mana token with an increase of 4.7%. The financial sector is one of the least bullish after climbing nearly 2.7% on average. Gnosis is one of the drivers upwards with a gain of about 8.3%. Byton is also helping the upward trend with a northbound move of 4.5%. The currency category has seen a gain of 2.7%. Stellar Lumens and Bitcoin Cash are some of the best performers here, with gains of 5% and 6% respectively. And lastly, the services section is the top performing category among the 5 groups with a move north of 9.3%. Storage is a top performer with a gain of 7.5%, and Huobi token is one of the drivers south with a loss of 6.2%. So these are where the 5 major cryptocurrency categories stand so far on this Wednesday. We'll now focus on the most significant moves among the top 100 cryptocurrencies to identify the top gainers and the biggest decliners. The top gainers have all gone north by double-digit percentages. Enigma coin tops the list with a massive upward move north of about 39% that pushed it onto the top 100 list. The NGN coin token began its move climb yesterday when it was priced at about 44 cents. It now stands at 61 cents. The Wacky chain continues its bullish drive. Over the past 24 hours, it's gained another 15.7% in value. The price of the coin is just over the 28-cent mark. Knowles has seen its price jump by over 15% and now stands at just above the 71-cent level. The chart of this mineable coin shows a 7-day move in spite of various swings. The project has announced the launch tomorrow of the Knowles 2.0, which allows for decoupling of models and further extends its language capabilities, making it truly agnostic. Walton Chain also shows double-digit gains. Its price has risen to $1.35 after a move north of 14.4%. The 7-day chart for this token shows a week of bearish sentiment until late yesterday. The project just announced that Bamboo Wallet PC client is now available for download on its official website. Users will be able to operate the wallet by connecting it to a PC via a USB cable. EOS is also riding the bull with a gain of 11.4%. The move north came in the early hours of today as it saw its price go from about $3.77 to just over $4. It announced the release of a new software aimed at building a more seamless contract development experience. There were no double-digit losses on the top decliners list over the last 24 hours. Ravencoin tops the list with a loss of about 10%, but its 7-day chart shows that despite various ups and downs, the price has gone north by about 35%. The Aurora token has seen a major fluctuation over the past week. Its price has lost about 6.3% of its value over the past 24 hours. The Huobi token has moved south by 5.5%, and its price stands at $2.40. After a week of ups and downs, the price remained basically unchanged. The Ravane token has declined by nearly 2.4%. The token has been on a path south over the past week, and its price is at just below the 13-cent mark. Crypto.com chain shows a downward move of about 2%. The price of the token stands at just over 5 cents. The 7-day chart shows a bearish momentum that has seen its price drop over to 7 cents. These were the top 24-hour moves during the European morning trading session on this Wednesday. We're now joined Jason Fernandez, an expert crypto analyst and COO at AToken, and Jeff Hancock, CEO of GetFIFO. Thank you both so much for joining us on the line today.
Thanks very much.
Thanks, Jessica.
Great to have you both. So, Jason, we're going to start with you because we're back talking about the price of Bitcoin. The price of Bitcoin is fluctuating continuously and struggling to hold above the 4,050 USD level. If it fails to remain there, experts do believe that it may drop as far as 3,600. Do you agree with this?
So I'd say I disagree with that. The main reason being that we know that it dropped to 39.57 yesterday, and then it popped back up to 4,077, which is what it is at now. And that indicates that there's quite a bit of support even at 39.57. So the chances that it would go from that to 3,600 in a hurry, to me, seems really slim, especially since we've just tested the 39.57 level. I'd be concerned if volumes were dropping and Bitcoin at the same time started trading downwards, but that's not the case. So we've had record volumes. We're looking at 11.5 billion in volume over the last 24 hours. And actually, with the exception of March, this March, it's generally rare to see even a $10 billion plus day for Bitcoin. So my view is essentially with Bitcoin price showing an uptick and volumes are high, those all seem like bearish signals to me, and that looks like it could get even better.
Even better. Okay, so what do you think, Jeff? Do you agree with this? Do you think that actually it might fail to break through the 4,000? It might drop to 3,600. Are you a little bit more optimistic? What's your thoughts?
I'm kind of 50-50 on that, to be honest. I mean, there's a lot of TA that suggests that we're inside of a bit of a wedge at the moment where we're slowly kind of compressing some of that pricing together. There are not a lot of sellers down around this 3,600 to 3,900 level. So I don't think you're going to see a lot of sell-offs. There are going to be more buyers down here than sellers. Above that 4,200 level that has a lot of resistance, there are not a lot of sellers over that mark either. So we're sort of, if we can break through this kind of region where there's a bit of, you've got a bit of technical analysis there, you've got a lot of, psychological stuff on the 4,000 level and the 4,200 level. It's going to take new money and it's going to take a little bit more volume to get there. Let's not also forget there's a few reports coming out at the moment of a lot of wash traded volume. So that 10, 11 billion dollar volume per day may not be necessarily genuine. It could just be a few bots trading against each other on various large exchanges. So time will tell. I think if more genuine money comes to the space, retail money that is, I think we can break through it and get to 4,000 in kind of no time. Sorry, 5,000 in no time.
5,000 in no time. And I think that's more what people they want to hear. So if we focus on that a little bit as well. So we've spoken about the potential 3,600. Let's look the other direction. If it does manage to hold this level, analysts have spoken that the 4,200 target does happen kind of before a rally happens. Is this a new bullish resistance level, or is it 4,500 before it breaks through to 5,000 and even 6,000? What do you think, Jeff?
I think 6,000 is super advantageous. I think you've got more psychological barriers at 4.5 and 5. 5 is a big magical number for a lot of people, especially if they're from sort of some FX trading background. Zeros, 5s, and 10s are very psychological for a lot of setups. So I think when we get to kind of the 4,500 mark, you're going to see a lot of cooling off again. You're going to see people selling, not necessarily dumping, but just taking profits. I think exactly the same thing around the 5,000 level, and I think that's going to be a massive indicator for people that are buying, now at these 3,000 levels, at these 4,000 levels, and taking profit at 5. I think it's going to be a really, really hard road to get up to 6. But then, yeah, we're kind of forecasting and speculating here.
And Jason, what do you think? Because do you think that 4,200 is potentially a new resistance level that we are seeing? And is 6,000, is that overshooting the mark a little bit? Is that overestimating the potential here?
Yeah, I said on the show yesterday that 4,200 would be the next number to look out for, only because historically, like early December last year, for example, 4,200 had been a significant resistance level. And that's why I said, those would be the next number to look out for. 4,500 is not technically, for Bitcoin anyway, a particularly strong psychological number. But I think overall, we're still trading in the 3 to 5K bracket. As Jeff pointed out, 5K is a really huge is a huge psychological number for a lot of people. And essentially, as long as we're trading in between the 3 and the 5K level, we're still sort of in the danger zone. Once we get past 5K, I mean, 6,000 is a dream at this point. But once we get past 5K, it could signal. It could signal a change, like a fundamental change. And at that point, I would be probably more comfortable, like past 5K, probably more comfortable saying that, the winter is over for now.
Yeah, I agree. Over. Awesome. Now we're going to move over to WhatsApp because we've had some massive news from there. First question will be if I'm pronouncing it correctly. So WhatsApp has announced its Woobit wallet, which will be available for beta testing next month. Potentially, this is absolutely massive news. Is this the beginning of a new stage in crypto adoption? Will it create a bullish momentum in the market? Jeff, we'll start with you. What was your take on this?
I think it could, but I mean, people still have to get that Bitcoin into their Woebit, into their Woebit wallet. And if there's some sort of exchange plugged into the back of WhatsApp or into the back of this wallet structure, there's going to be some sort of convenience fee attached. So especially if it's through some sort of credit card provider or a debit card provider like Simplex or some of the other competitors, it's going to be north of 5%. And some people will simply see that as expensive. There's a lot of other fintech apps out there at the moment that are doing regular cash swap to cash swap in a social manner as well. So I think they're going to have to compete with that. I think people like the idea of crypto and the draw of it. I think it's just how they pull it off to kind of gamify it and make it easy. I think that's going to be the real test. I mean, the pictures of it look great. Some of the videos out there and the reviews. But are people going to use it? That's kind of the big question. So I'm sort of a little bit 50-50. I want it to work really, really badly. Because, yeah, anything that brings more people to the market is a good thing.
And it's a really bold statement, isn't it? Is it the new stage of crypto adoption? And I guess a lot of people that come on the show, yourselves included, will say that adoption is actually people using cryptocurrency without necessarily knowing they're using it. So Jason, what do you think about this news from WhatsApp? Is this the next stage of crypto adoption potentially?
So I think it's important to note that Woebit isn't really a WhatsApp initiative per se. Woebit is basically a private company that's essentially figured out a way to piggy bank basically their crypto wallet onto WhatsApp and to sort of integrate it to some extent to allow for the ease of transfer between parties. So while and that's basically either good news or bad news depending on which way you look at it. Obviously, if it had come out from WhatsApp, like WhatsApp had launched their own wallet, it would have a much greater impact because WhatsApp, has just massive usership, and having that sort of functionality built in can, make a huge difference. On the other hand, Wabit is actually looking to launch their wallet on other platforms like Telegram and other chat platforms. So that could actually be a good thing in the sense that you're basically, instead of just having it on WhatsApp, you have it on WhatsApp and most other common chat platforms. But ultimately, as Jeff pointed out, there will likely be a fee, and it'll all come down to how exactly that's implemented and whether it's convenient and whether it's a good bang for the buck to where people are willing to use that service.
Okay, 10 out of 10 pronunciation there as well.
Sorry,
Sorry, Jeff, I cut you off there. What did you say?
Sorry, WhatsApp could purely just acquire this wallet provider if they see the tech is really good and they see it as an opportunity. They could acquire them very cheaply, compared to the price of WhatsApp, and make sure that it doesn't get onto Telegram and it doesn't get on the other platforms, and they can soak it up and put it into Facebook Messenger, Instagram, and those other ones before anyone else can really capitalize on it. So it could be a cash grab from them as well.
Potentially a huge reach as well, absolutely. So now if we move over to NASDAQ, so NASDAQ too has made an announcement that it may help bring in more investors. We are of course talking about BCore's crypto exchange, which is expected to go live in the first half of this year. Will this create greater trust, and therefore will this drive the market up? And Jason, we'll start with you now.
So yes, I think so. I think it will make a difference. Ultimately, this will draw some comparisons to NYSE's backed. But what's important to note about because it's essentially a crypto startup that has licensed Nasdaq's market surveillance tech in order to basically handle certain activities such as monitoring markets for manipulative activities and other types of suspicious conduct. So it's not quite a NASDAQ initiative per se in the same realm as NYSE's backed is an NYSE initiative. But it is, I think one can certainly imagine that how having NASDAQ tools evaluating the crypto market for manipulation can make crypto traders, sleep a lot easier. So that could have a great impact and drive the market up. Certainly having somebody like NYSE and then introducing backed, and then you have using NASDAQ technology, we're starting to see some really big names get into the business, and that's really huge. I mean, that's important.
It might provide more security for current cryptocurrency traders. Would you expect it to also bring in new investors potentially?
Yeah, I mean, essentially, people will be using the service, the Because service. So you're going to have people that would normally not consider investing in cryptocurrency, but now looking at the fact that Nasdaq is essentially monitoring the market for manipulative activities and any sort of shady stuff. That's something that you have to think people are going to be resting a lot easier. And so not only will people that are existing crypto traders sleep a lot easier, but I think it'll encourage new people to get into the market, people that maybe have used NASDAQ technology in the in other financial markets that they've been playing at, and now figure it might be interesting to use it in crypto.
And Jeff, I'd love to get your insights on this based on, your experience as well. Do you think this is going to set to bring in new investors into the space?
I think it will. It brings quite a lot of legitimacy. I mean, this is, I say, 2019 is the year of the build. So you see a lot of high-tech platforms, a lot of players coming in and just building really, really cool tech. I think it'll help clear out a lot of this fake volume kind of malarkey, seeing where the volume is coming from specific places. It'll clean up a lot of the OTC trades, big whales moving stuff between wallets that's off exchanges. That's not impossible to track if you know where to look, but if you're not looking at specific wallets in order to track where these large quantities are moving around, this tech will definitely help clean that up. And with all of that kind of happening, you're going to finally see some of the bigger funds, that have used, like you say, Nasdaq stuff in the past or NYSE stuff in the past. and it might start them to dip part of their portfolios. I'm talking like big funds here, like Fidelity and some of the other bigger ones, using that trust and using that legitimacy to just try and access maybe a 0.5% or a 1% of their liquid portfolio for their clients, gaining access and gaining exposure to the market in a much more trustworthy, secure, and legitimate way. So I do think it'll bring money. It won't be overnight, but I think we're slowly building up that trust and getting rid of that kind of scammy nature that's kind of plagued the space for a little while.
And in light of that, I want to ask, because you've talked about exposure, you've talked about actually like brand awareness and being available. So a report in news yesterday revealed that actually Microsoft's Bing search engine blocked over 5 million crypto ads last year. Do bans like this, do they negatively affect the market or at least slow it down? Or is it positive that we are filtering out some of the potential scams in the market? Jeff, we'll start with you.
I think it's a bit of both. I mean, there are some really good legitimate projects out there and legitimate businesses that try to follow the guidelines that have all the documentation and have all their registrations and regulations if they require it. But you automatically get thrown in the corner with the bad players that are putting out scam ads. They're putting out guaranteed returns and all the other things that go with the bad actors in the space. And I think it's good in a way. It's protecting people from that don't know any better, that may fall into these traps and lose their money, which only causes bad reputation for the space. But at the same time, it can kind of work against the good actors in the space that are trying to build reputable brands and reputable products. We've come up against this ourselves with our own advertising with our brand. And you find yourself either going out to more events and doing marketing the old school way, or simply just concentrating on your core market and your core team. But if what they kind of need to do with that kind of adding and blocking, they almost need to look at some of the data they're getting from it and looking at some of the complaints that come out of it from the real players, and allow advertising for the stuff that isn't a scam, and allow advertising for the people that are doing good work in the space.
And that's a really good point, to effectively help the market mature in some way. Jason, was there anything that you'd like to add onto that?
Yes, so I do think that hurts the market. Basically, not being able to advertise crypto seems really barbaric. As Jeff pointed out, there are a lot of very legitimate companies doing really legitimate work that are not able to advertise and just basically have a whole avenue of customer acquisition that's just basically locked down for them. And it's essentially a case of where you're tarring everybody with the same brush. It's almost like restrictions that were placed on cigarette ads in the 80s. It almost seems barbaric. On the other hand, I get why it's there. And the advantage of that is that it limits the publicity that these scam coins get. So a lot of these scam coins are heavily promoted via marketing. And when one of them crashes and burns, because everybody has heard about it, because it's all over. Let's say, for example, the ban was lifted and it would be all over there. Then essentially, as everybody hears about that, that's bad for the crypto industry at large. So basically, blocking ads in general minimizes the press related to the fallout when these coins fail spectacularly, and we know that happens, and that's going to happen. This way, at least, nobody hears about it.
Okay, and now just finally, because we are close to running out of time, but I do want to ask you both this quickly. So we spoke yesterday of fake Bitcoin traded volume reported by CoinMarketCap. And this report has not actually had an impact on the market yet. Jason, we'll start with you. Should we expect some repercussions from this report?
Yeah, I don't think we'll see a direct impact on the market. I think we've certainly seen, we haven't seen one thus far, and I think that's because a lot of people have already priced this in. A lot of people are well aware that there's some degree of fake volume and that some of the numbers are manipulated. But going back to Jeff's point earlier about 11.5 being today's volume at 11.5 being an obviously inflated number. Well, perhaps it is inflated, but we know that these volumes have been manipulated from the get-go, from before. So the delta is still useful, knowing the difference between the number now and let's say the number last year or different years. There's a reason why it's popped up now versus other times when basically this sort of manipulation was going on everywhere. So, I mean, in the longer term, though, I retweeted a suggestion that Matty Greenspan made yesterday on Twitter that CoinMarketCap should delist crypto exchanges that are faking transactions. And something I think that should be done rather sooner rather than later. And that might take some of these lower cap coins and make them disappear altogether. And good riddance, I say, let's trim the fat.
Okay, and Jeff, what's your thoughts on this as well? Are you in agreement with Jason?
Yeah, definitely. I think there has to be some sort of repercussion, some sort of cleanup, and whether that's through, the Nasdaq tech or through, that's a really good suggestion on the delisting out of CoinMarketCap, because everyone uses CoinMarketCap as gospel. We saw this exact same problem a few weeks ago with Kevin from Bitcoin Gold. New exchange listed it, went through the roof, and that that little bump affected the data across all the exchanges, and so that had a problem. But all of it leads back to CoinMarketCap. So trimming the fat, that could be really, really helpful. It could be a start, better than a slap on the wrist. If people lose the access that they have to display their markets on CoinMarketCap, it could it could be a step in the right direction.
Well, thank you both so much for joining us on the line. It's always a pleasure to catch up. We really appreciate you joining us throughout the live show today. Thank you.
Thank you very much.
Thank you. Now, before we sign off, I do have an last-minute update from our editorial staff regarding the crypto market. The Bitcoin continues to rally and approaches the 4,100 resistance level. The top 100 cryptocurrencies are all in the green except for 3. The bullish momentum has pushed the total market capitalization north by about $1 billion in only a few hours, and it stands at $142.4 billion. The 24-hour trading volume has corrected south slightly to $36.7 billion. This wraps up Wednesday's Crypto Now live show. We thank Jason Fernandez and Jeff Hancock for their expert analysis, and we thank you, the audience, for joining us, and invite you all to accompany us every weekday at this same time.